Good afternoon. This is Coach Mike. We're going to start talking about this incredible program we have, the Focus Group. I hope everybody's excited about the progress we've made in such a short time. We got to stay on our toes and prepared properly. Now, remember, and I'm going to say this, and I want to really let it sink into you. When we talk about the trades from the Focus Group spreadsheet, which we're about to do in this video, this is really your opportunity to have me explain to you what I'm seeing and the potential trade we can make so that you're prepared to make it when you see that alert. And by being prepared, I don't just mean, well, I'm going to sit here and wait and twiddle my thumbs. You know, if you're in the chat room, come Monday morning, these trades we talk about, you should already have the options chains open and ready to go so that if we do make that trade, boom, you hit a button. And if you're not able to join us in the chat room and you're working, you should say, you know what, if I see an alert come for this, I know what I need to do. I don't need to think about it because it's already planned. I just need to execute what we talk about in this video. So make sure you are really paying attention, maybe take some notes. The first trade I have on the focus group spreadsheet this week is for the January 17th 205 calls. Now, before you stop thinking or start thinking and say, well, we already have a position in those, why would we buy another? If we take this position, it would be a completely different position. Yes, it would just so happen to be the same expiration and same strike, but we would trade it completely different. Right now, the options chains aren't available for the February monthlies. They should come available tomorrow. They might not. If they do and we take this trade, we would actually take the February monthly, not the January. And if the February monthlies don't come available tomorrow, we may take the January monthlies and roll them over to the February monthlies when they come available, which means we'd buy this position, let it make the move. As soon as we see February monthlies, we would sell this position, buy the February monthlies. Very simple. So what we're looking at here is, again, we talked last week about the weekly swing points. We held the 188.07. You could say, well, no, we didn't. And I could say, well, then you're not looking at the weekly chart, because even though it dipped below, it closed above. And that's all that matters here, is that close above. So if we do make a continued up move, or even if we made a down move and still held that 188.07, we would look for the opportunity at those 205 calls with that 209.20 as our target area. So tomorrow when you're preparing, you should have an options chain up ready to go. So all you got to do is click a button for the 209.20 calls. Now my estimates, I put in the entry target less than 195. If it were to, gap up or something and we had to buy it at 195, the estimated price we'd be buying for is about $1.10. I use that entry target area just to calculate those prices. Okay, now on to the next trade I have listed, which is for the January 9th 185 puts. Most of last week, we were looking at this 60-minute chart with this 194.87 target area. We started out with the January 2nd 182.50, 192.50 calls, and we sold those and turned around and bought the December 26 ones. I did that because on this breakout of this candle, I said, you know what, we might gap up and hit that target tomorrow morning. Well, because I bought the December 26s, I wasn't going to put myself in risk of holding over the weekend, because even if we would have come up a little bit, pulled back like we did here, and then not hit that target Friday, hitting the target Monday or Tuesday would have actually made us sell for a lower price than what we sold Friday, simply because of the time decay that would have been there. So that's why I sold that December play. But now we also have to look at this Fibonacci extension and say, you know what, Coach, it hit our target and it pulled back from. And we're going to delete this and remove that and say, you know what? If we make continued downward movement or come up and don't break this high point before pulling back again, we're going to be able to target 179.34 for a play in those January 9th 185 puts. Now, if we gap down, the next part of the video, you'll hear my discussion on a potential gap down and what we would do. But if we don't gap down and we just continue downwards, we would look to get in those before it fails 192.80. But actually, that's just the price I use to calculate the options. But understand on these, I have that estimated price 125. And in actuality, the calculation I used said somewhere between 190 or 129 and 132. The reason I put the 125 is, we've had luck in using the spreads to our advantage and sitting those good till canceled orders at 125. Remember, there's a reason for that. Right now, I'm trading a maximum position size of $250. So 125, I can buy two, but at 126, I can only buy one contract. And I want to try to get two. So if I had to leave this order and good till canceled or something at 125, hoping I could get filled, I would. But if it were to come down and fill this gap and then keep moving down, at that point in time, we might have to buy these, just one of them at 180. And at that point in time, that's what I would do. But I'm not doing that right off the bat. I would be looking at letting my order sit there and see if I could get filled. We've done that 3 times, trades that we set an order at 125. In each of those 3 times, it gave 3 to 5 different points where it would come back and fill people. And that's what we'll need to focus on. So, 2 trades we should be looking at, especially going into tomorrow, is that 117-205 calls and the 185 puts, because those are the 2 with the highest priority for me. Now, finally, you're going to see this third trade potential for the January 2nd 192.50 puts. Now, that's going to be with this 191.36 target area. But I want you to understand that this Fibonacci extension target, based on this high, this low, and then this high at 193.14, is also a potential that it could just hit and bounce from. That's why I have it on my chart. So what I'm going to look to do is, because of the price that this contract would cost and the limited move, I wouldn't necessarily be looking to make this trade if it just slipped below 193.14. I'd actually just say, screw it, I'm not going to make that trade, but I would make the 185 puts trade. But if it were to hit off of this 193.14, make an up move that resulted in a lower high, then I would be extremely happy to take that trade for the 191.36 target. I want to give you an example of what also could happen. I'm not saying it will. It's 12:30 right now. I can't even see the futures because the futures market's not open. But over here, when we came off of our high, we had a big gap down, and then we charged up. Well, actually, this gap down was to another Fibonacci target similar to this 191.36. So if we were to gap down to that 191.36, what we would actually look at that point was letting it make an up move. Letting it make an up move. And now the candles aren't here, so I'm just going to show you a simulation on what possibly could happen. So the price target that's used on it, don't focus on that, focus on what I'm doing. Let's say we took our Fibonacci extensions and we gap down to close to that 191.36. And I'm just going to use 191.36 as an example, so I'm going to click there. And then we made an up move that resulted in a lower high, let's say somewhere around 194. We would put a Fibonacci extension set on our chart like this, and the trade we would make would actually be on the new target. Don't focus on this 190.37 because it's irrelevant. We don't have the price points to accurately say what it will be. But that process, if you could imagine candles happening, like if it drops down here and then goes up, and when we clicked on those points for our Fibonacci extensions, that process is what you would have to adapt your charts to for the next potential trade. Now, because those points don't exist, I'm deleting that. And I want to focus again on this trade for one more reiteration, that the only way I would make this trade on the 192.50 puts for January 2nd is actually if it made an up move that did not make a higher high, so we'd have to have a lower high and start to pull back. At that point in time, if I saw it bounce off of this area, I'd be able to delete this. I'm going to leave it up there for now, though. And I'd be able to delete it, and then I would still use the 191.36 target. That's the only way I'll enter this trade. It is a holiday week. Markets are only open a half day on Wednesday. They're closed on Thursday, and we resume trading Friday. And then we rinse and repeat that same schedule the following week for New Year's. So this week, I'm not really looking to force a whole lot. And remember, we haven't had to force a whole lot to double accounts in the past 3 weeks for those that are trading with the focus group. So let's understand that sometimes it requires some patience. We don't have to trade a lot to make a lot of money and have a big return on our investments. So that's what we're going to focus on in the upcoming week, making sure it does exactly what we've talked about, or not forcing a trade. Good luck to you all in the upcoming week. I hope you join me in the chat room. God bless and Merry Christmas.